So the market rally is getting a little tired. In fact, showing some signs of fatigue today after opening really strong with that spark from the jobs report. The 4-week market winning streak snapped. But, I happen to like when the market does what we call back and fill, particularly when it does it in an orderly fashion. And considering that we've had more than 100 straight sessions without a decline of 1% for the S&P, it has been very orderly. Now, there's no doubt everyone from novice to seasoned money managers are becoming somewhat anxious, and you would after this kind of run-up. But those nerves should be quelled with evidence that underlying fundamentals are improving. The foundation of this economy justifies a higher stock market, and it all begins with Main Street enthusiasm. Each sentiment survey, of course, since the election has shown greater confidence. But the best measure of this, let's face it, unemployed folks hitting the bricks. Last month, the civilian labor force increased by 340,000, lifting the participation rate back to 63.0. That's the highest level in the year. In fact, it's a pivotal level. It could indicate some sort of inflection point. And you know what? Instead of hoping for things to happen by going to the voting booth, people are seeking out opportunities. The other key Main Street foundation comes from higher wages. Now, in that score, 2.8% year-over-year wage growth, that's pretty impressive in February, and it hints right now at faster wage increases, particularly for skilled workers. Now, I point this out as more and more people are expressing concern. I'm talking people who've made a ton of money in the market to those who are still kind of kicking in tires. Speaking of dips, Geo Group is a stock I want you to take a look at. It was back this week, but I think this operator of private prisons is a major buy, and I see this stock going to $60 before the year's over. GEO is the stock symbol. And by the way, I want to take time to thank the anonymous viewer for making me this shirt, Unleashing Your Animal Spirits. I'm going to definitely wear it with pride. I really, really love it. By the way, I've got a programming alert for you. You don't want to miss Wall Street Week tonight. In fact, here's a sneak peek. Special guest, Tony Robbins.
They all look at, number one, how do I make sure I don't lose money? No matter the market by having great enough asset allocation. Ray Dalio's whole theory is 15 uncorrelated bets will reduce your risk by 80%. And your risk-reward ratio goes up 5 times. So if you diversify, you're protected. Then they look for asymmetrical risk reward. How do I get the biggest reward with the least amount of risk? How do I risk $1 to try to make 3, 4, or 5?